Hey guys, how's it going? Welcome to another episode with the Firefighter.Realtor, your DFW realtor. My name's Sal. I am here to give you guys May 2022 market update. So I'm pretty excited. Wanted to go over with you guys what's going on this past month. I know a lot of you guys have been probably seeing a couple more houses go onto the market, and that is true. And I know some of you have been wondering whether interest rates are still going to go up a whole bunch or are they going to go down. In the end, no one actually knows, but the Fed has said that they will be increasing interest rates over this year. And just to let you guys know, when the Fed increases interest rates, it doesn't affect mortgage rates specifically. It does affect them indirectly. So just to let you guys know, the mortgage rates are tied to the bond market, not so much the Federal Reserve just increasing rates out of just to control inflation. Okay, and yeah, lots of factors do affect the housing market, which is also the interest rates. But another thing that affects your mortgage is going to be your credit score, how much you're putting down, what you're using the property for, whether it's a vacation house or investment property, or you're occupying the house. There's a lot of different things that go into y'all's mortgage or our mortgage rates. So in the interest rate, it's a big part of it, but it's also kind of a small part of it. It's all lumped together. Okay. All right, guys. So let's go ahead and go over some things I want to go over with you guys. The housing market update has come out for April 2022, which we usually get the previous month. We don't get this month because it's not over yet. Obviously, duh. Alrighty, so let's go over some articles that I've been saving and wanted to talk to you guys about and kind of review, so you guys are a little bit more educated. I become more educated as well when I look into this, and I keep myself informed. Okay, I know you guys don't probably look at these or the news all that often. I don't like looking at the news every day, but sometimes it's good information out there. So I try to just keep it positive and just kind of just look at the real estate market. Because it's my forte. I don't try to look at anything else, all the negative stuff. By the way, what you feed your mind is what grows in your mind. So, little hint. Alrighty, guys, let's look at dun 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 dun. Let's look at all right. Oh, look at this. Home affordability is nearly the worst on record as mortgage rates spike. When, like I said, remember when the Fed increases interest rates, it's not directly affecting the mortgage rates. It's just they kind of just follow each other, okay? Because it's tied to the bond market. And as you guys have probably seen, this past several weeks ago, the Federal Reserve came out and they hiked interest rates 0.5%. And that's because they're trying to control what's going on, the inflation. So not only is like the housing market going up, everything's going. Everyone's already seen. Like, we're paying more at the gas pump. If you go to Home Depot, you try to get a piece of lumber that was $2, $3. 2x4 was probably like $2, $3 before. Now we're paying like $9, $10, which is nuts. And then a couple other things. Let's look at this next one. So the Fed raises rates by 0.5%. This is the one I was talking about. Of course, one of the key points in this is that the rate move is the largest since 2000 in response to inflation. Usually, obviously, if there's lower interest rates, it's easier to afford a home, right? And so the demand is high because everyone can afford a home. But the interest rates are high, which they're trying to do. They're trying to bring it to where less people can afford a home, so more houses come on the market. So not everyone's trying to bid for all those houses all at once. And what we're seeing here, especially in the DFW area, if you guys live here, if you guys know anything about Dallas-Fort Worth, it's the fourth largest metroplex in the States, and it's highly sought after to come here. I used to live in Austin, and I thought Austin was busy. Man, you should see DFW and what's happening. All right, you guys, so if you guys haven't seen what's going on in the DFW area or been following me recently, it's been really a seller's market here in the city, or in this metroplex. I do want to go over the housing report that I'm pretty excited to share with you guys. So let's go over it. All right. So as you can see here, the median price is 20.3% up since last year. So median price is 350,000. Active listings are going up 3.9%. So what that pretty much means a little bit more houses are going on the market. And then that kind of, if you look at months of inventory, 1.3. So that's 1.3 months worth of inventory. So that means if nothing else went on the market, it would take 1.3 months to sell everything on the market. And usually, just to let you guys know, I mean, a lot of people say different things, but usually about 6 to 9 months worth of inventory is about a stable market. And if it goes more than that, it becomes a buyer's market. But right now, it's definitely a seller's market. 1.3 months to sell everything compared to 1.3 last year. The last couple months, it was like less than a month's worth here in the DFW area, which was still nuts. I mean, you could probably we can hop over real quick to Collin County. Here you go. Here's Collin County. Month's worth of inventory is 0.8. And that's like cities like Frisco, Plano, McKinney, Prosper, those cities. And the median price there right now is 550,000. And the market share from 500 to 749 is 37.3%. So you can only see how expensive those houses are up there. Closed sales though, 11.7. So they're not closing as many this past month. Interesting. All right, let's go to Dallas County real quick just to shake it up a little bit, a little different. 370,000 is the median price. 0.9%, or I'm sorry, 0.9 of a month worth of inventory. So you can take that those numbers as you want. I mean, those are just raw numbers from April 2022 from MetroTex, the MLS agency. Oh, and here's another thing, guys. So right now, a lot of people are going out there getting ARMs, which is adjustable mortgage rates, and it's a little risky on those. And the reason is because those are tied directly to the economic index, which is basically, how can I say, if interest rates go up a lot, those rates are going to go up. It's not a fixed rate. So like usually when you just apply for a mortgage, you get a fixed rate of like, oh, I'm going to pay 3% for this house for the next 30 years on the interest rate on this house. That's what I got. Well, ARMs, or adjustable rate mortgages, usually come in at a lower introductory rate of for those interest rates. So it might come in a little lower, but over the life of the loan, you're going to be paying more. So a couple quick questions that you want to ask yourself if you are thinking about getting an ARM, adjustable mortgage rate, is number one, how long are you going to be living at that house? So if you're only going to live there the next 3 to 5 years, and you're not going to be exposed to those higher rates, maybe it's for you. Talk to your lender, talk to your financial advisor. I'm not one, so go talk to them, but that's a good question to ask. Another good question to ask is, how often does that interest rate adjust? Is it every 3 years, 5 years, 10 years? I don't know. I'm not a lender, but that's a good question to ask. How long is this rate going to be locked in for before it changes? Another question that you want to ask is, ask your loan officer exactly what's the situation going on with interest rates currently. Not right. It could be now, it could be in 1 month, 2 months, whatever it is. Make sure you ask them. Don't just go in there assuming that it's the best time to buy a house. Sometimes it's not the best time to buy a house. Sometimes it's the best time to sell a house. I mean, obviously, right? So right now we're in a seller's market. So if they say, hey, interest rates could be a little, they can adjust a lot, probably isn't the time to get an ARM, okay? And last question, the biggest one to ask yourself is, if my mortgage, adjustable rate mortgage, goes up, will I be able to afford it? That's the big question you're gonna have to ask yourself, because in the end, you're gonna be paying for it, and you don't want to get to a point where you were able to afford it, and all of a sudden now you're not. So that's pretty much it, guys. I don't have a whole bunch more. I hope you guys enjoyed this. It's not. I just want to throw out some information for you guys on a monthly basis that what's going on. And right now, the demand for adjustable rate mortgages are up 14% just this month, because people just think that that's probably they're gonna take that risk to be able to pay less on a mortgage, which is kind of scary, but it is what it is. people have their financial advisors and they're able to listen to them, and hopefully they, well, at least hopefully they do, right? Last but not least, guys, I am here in the DFW area. My goal is to be a resource for you guys. Make sure that come out here, be of value to you. If you guys have any questions for here in the DFW area, it's a big metroplex. So, I mean, you can go from McKinney to Fort Worth, and it's two totally different places. Especially even Frisco to McKinney, even though they're pretty close to each other, it's two different environments that you could live in. And so if you guys are moving from California or Florida, New York, wherever, and you guys just want to see a house, or you guys want me to tour a house for you guys and send you guys a video, be happy to do that for you guys. So that's pretty much it. Alrighty, guys. Well, thanks for watching. I hope you guys got some value from this. All right, see you later, guys. Peace.